What are the tips and important note for option buyers? When buying options, whether call options or put options, it's important to understand that options trading involves risk, and not all trades will be profitable. However, here are some tips to consider when buying options. Understand options basics. Before buying options, make sure you have a solid understanding of how options work, including the concepts of calls and puts, strike prices, expiration dates, and option pricing. Define your strategy, determine your trading objectives, and choose a strategy that aligns with your goals. Are you looking for short-term speculation, hedging, or long-term investment? Identify high-probability setups. Look for options with high-probability setups based on technical analysis or fundamental factors. Consider the underlying asset's price trends, support and resistance levels, and upcoming events that may impact its price. What is time decay awareness? Be aware of the time decay or theta of options. Options lose value as they approach their expiration date, so consider the time horizon of your trade and avoid holding options too close to expiration unless your strategy requires it. Please explain about managed risk. Set a clear stop-loss level or maximum loss for each options trade. Options can be highly volatile, and limiting your potential losses is essential to preserving your capital. What is use limit orders? When buying options, consider using limit orders instead of market orders. This allows you to specify the maximum price you are willing to pay for the option and helps prevent unexpected execution at unfavorable prices. What is option liquidity? Trade options with sufficient liquidity to ensure smooth execution and narrow bid-ask spreads. Liquid options are easier to enter and exit without significant price slippage. Be wary of trading costs. Be mindful of trading costs, including commissions and fees. High trading costs can eat into your profits, especially for smaller trades. What is paper trade in practice? If you are new to options or trying out new strategies, consider paper trading or using virtual trading accounts to practice without risking real money. Keep up with news and events. Stay informed about market news, economic events, and company announcements that may impact the underlying asset's price and the option you are considering. Avoid chasing quick profits. Be cautious about buying out-of-the-money options with the expectation of quick and substantial gains. Such options can be speculative and may lead to significant losses if the underlying asset does not move in your favor. Remember that options trading can be complex and involves risk, so it's essential to do your research, develop a trading plan, and consider seeking advice from a qualified financial advisor before buying options. When engaging in options trading as a buyer, also known as a holder, there are several important tips to consider to enhance your chances of success and manage risk effectively. Here are some option buying tips. Define your objectives. Clearly define your trading objectives and the reasons for buying options. Are you aiming for capital appreciation, hedging existing positions, or leveraging market movements? Choose liquid options. Trade options that have sufficient liquidity and volume. Liquid options have narrower bid-ask spreads, which can save costs when entering and exiting positions. Determine the right time frame. Decide on your desired time frame for holding the options. Options can be short-term, weekly or monthly, or long-term, leaps with expirations up to several years. Analyze underlying asset. Conduct thorough research and analysis of the underlying asset. Understand the market conditions, company fundamentals, and technical indicators that could influence the option's value. Can we buy out-of-money option contract? Out-of-the-money options have no intrinsic value, meaning the underlying asset's current price is not favorable for exercising the option. Be cautious when buying out-of-the-money options as they are more sensitive to time decay. Manage time decay. Be mindful of the time decay effect on option prices, especially as the expiration date approaches. If you are buying short-term options, ensure that the market moves in your favor to offset time decay. Monitor market volatility. Be aware of market volatility and its impact on option prices. High volatility can lead to higher option premiums, while low volatility can reduce their value. Stay informed. Stay up to date with market news, economic events, and earnings reports that could influence the underlying asset's price and affect your option positions. What is the summary? Remember that options trading involves risk, and past performance is not indicative of future results. It's essential to continuously educate yourself, manage risk effectively, and consider seeking advice from a qualified financial advisor before engaging in options trading. If you like this video, please subscribe our channel to watch more videos. Give thumbs up, like and share with your friends and family.